Hello, I'm Julia Cordova, and welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using the CME Group event contracts to trade E-mini S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natural gas, copper, and Bitcoin. Today is going to be a great show. I have got my friend Barky. He is at Barkworth17 on Twitter, and we're going to talk about how you can use base box strategy to define whether or not a trend has changed. Today's broadcast is brought to you by Tradeovate, which has built a custom app dedicated to trading those CME Group event contracts. And that's what we're all using at Place Your Trades. So very quickly, I'm just going to give you a quick overview into what's happening in the market. I'm going to share my screen here. You can see this is what that Tradeovate web app looks like on your phone. And interestingly enough, you can see sort of the price action for today. It looked like we were going to zip up this morning, and then we came back, which actually, from a purely strategic perspective, as somebody who thinks that potentially we might get a pop this week, I don't mind, because the last two Mondays have been bright green, and then all of the rest of the week, not so much. So what I want this week is I want a green Monday. Not sure if I want bright green, but I want a green Monday and then some continuation into the rest of the week. So let's look here at the membership area. So this is the Place Your Trades website. I do go here every morning about 9:35 or so. You know, it doesn't hurt to have an extra edge. And about 9:35 or so, if you go to the dashboard, you can see the daily gap stats for metals, energy, and indices. I mostly focus, for me, the daily gap stats are a bit better for the indices. So that's what I focus on. And you can see the probability of the market, whatever you're looking at, closing higher than where it opened. And you can also see the profit factor. So anything above 55% is yay. And anything over a profit factor of 1.3 is also yay. So when you've got those two things going for you, it means that potentially if the price gets below where it opened, then I'm going to look for a place to buy it. So that's basically what that means. Okay, let's go and talk about today's presentation. So I asked Barky to be on because I have been following him for a long time, right? More than a year. And Barky is someone who is very methodical and can help with what I think a lot of new traders struggle with. I know I did, because when people would say, well, the trend is obviously whatever it was, I would get confused because we're talking about what time frame are you in? How do you define what a breakout is? How do you define sort of when that trend has changed? That's like the holy grail. And people talk about it as if it's really easy. It's not easy. It's truly not easy to know when the trend has changed and when a breakout is. So he was kind enough to share what is called a base box strategy with me. And I thought, you know what? Everybody needs to see this. This is so brilliant that I wanted to give him more exposure, give his work more exposure, and share it with you in case you find it as valuable as I do. I always like having new tools in my stable of things to do. So, that was a big intro, Barky, but hi, welcome.
Hey, good morning. It's good evening here.
Yes, thank you so much for
that. Thank you for
Barky
having me.
Barky is in Norway, so he's really taking time out of his life to talk to us today, and it's a pleasure having you. So thank you. So first of all, just a little bit about your background. How did you come into trading? How did you come into the type of technical analysis that you do?
Yeah, trading. I guess I came to the market in the same way as everybody else did. You know, I wanted to invest in artificial intelligence in 2017, 18. I really thought that was going to be the new thing.
Wow.
There was a new industry developing, cannabis. You know, they were talking about legalization. You know, this was at the time that Canada legalized, and you know, I had different businesses. I've been in the music industry. I've been doing real estate, and I had money. I wanted to invest. So I had my thesis, and I came to the market with the expectation to, you know, just invest in something and make money. And that didn't work.
It's not as easy as you make it look, right? It's not just, oh, no problem.
I did so much work, and I had fundamentals, and and that was the company and this one. So I had my portfolio, and in a long story short, I had no idea about markets, price action, trend, like absolutely nothing. I just wanted to invest, and it turned out that I invested in really potential companies, but in the middle of a bear market and right after a parabola. I had no chance. The price started going down, and I didn't understand. At some point, I cut with like 70% loss or something on just that. And I sold actually right before things started to go up.
So basically, you're like every other person. And then your technical analysis, though, you seem like you have a very analytical mind. I don't know if I've ever met somebody who's not an engineer with the same sort of thought process that you have, because following your work, you are just so methodical. You're such and I'm just going to call your brain. It thinks like you think like an engineer, at least from what I've seen.
It's maybe a curse, really. To
I know.
See everything, but I have obviously a couple of disorders. It never was in my way. I've always been happy and just able to function and achieve my goals and everything. But the analytical mind, I'm very visual. I have a symmetrical mind. I see patterns. It just jumps at me. My problem basically is I see too much, so I have to decide what I'm going to react on. It's in terms of trading, it's been really interesting, especially because trading, you really have to do the opposite of what you think you see. Price is always trying to seduce you.
Yes,
FOMO in.
It's a trap. It's always a trap, and so the problem is, for me, when I started trading, the exact time I want to cut is really when I should have been buying. Because that's just, and they make it look like that on purpose. But I was so excited when guys, so Barkey sent me a PDF about a week ago, and I was so excited when I read this PDF, because it was actually something that people can use. You can see the boxes there, and we're going to have it available for download on our website. Barkey's also got a Substack. I'm sure it's there as well, so check that out. But you can just download it from the website if you'd like. And
I can react to that. I chose to postpone the Substack release to give.
Right. Thank you. Yes, I appreciate that. So you can get it right away on Place Your Trades. And then if you want to wait a little bit, it'll be available on Substack as well. But let's talk about this. So what am I looking at here? These boxes, what are they?
Yeah, it's an interesting principle. I mean, they're basically just rectangular corrections. And inside these rectangular corrections, there are trends happening on lower time frames. This is a daily chart, what you see here, 4 hourly actually, on the S&P 500.
Mm-hmm.
And you see that on the period of a year's time, you see these moves, these big moves. And always the question is like, where do you want to get exposure? Where would you like to take a risk? Where should you place your stop? And I've come from various studies, and I never choose the simple way, I guess. When I came to markets and realized it was time to start studying, I started with Elliott wave theory. I invested a lot of time in learning that. It actually worked. But I sort of learned that Elliott wave is perfect for confirmation of completed patterns, but it never helps you to predict the next pattern. So it doesn't give you anything to work with, really,
It just tells you after the fact. Right.
I had Gahn, I had Wyckoff. I think I went all the way. It's ironical, actually, that, earlier this year I discovered supply and demand, and that's what I should have started with.
Too easy.
Yeah, I really had no idea. We could talk about quite a lot, but I suppose we have like limited time. I came across various guys on Twitter. Social media is just great. There are a lot of really good, follows there. Ripster would be a good example. Yourself, I really love the diagonal work that you do.
Thank you. I'm a channels person, but
you're a channels person, yeah. Actually,
I do a lot of
big part of my system as well. We'll get to that a little bit later, but And at some point you just have everything. You have patterns, you understand waves, you see, but how does it all work together? And that's when I met the boxes guy, Chris Carrion, and he's a brilliant trader. He's a very simplistic trader. He just depends on breakouts, and from there it's just risk management. And he works with boxes just basically in general.
So I have a question, just a basic question here.
Yeah.
If somebody is looking to sort of start this, to follow this kind of strategy for themselves, how would they define where to draw a box and how large the box is in every way? How do you set those? Are those parameters something that that people can do for themselves? Are they something quantifiable? Are they watching it?
What you need first is you need to have a downtrend.
Okay.
And because you have these contraction patterns, and what you get from contraction is expansion until price reaches, and you get like a swing low. So that's what you need. You need a swing to end, and then you can start looking for a reversal. First, before any reversal, you need to have a trend that ends. You need to put in a pivot. But once price just jumps into a lower low there, you cannot just go long there. Of course, you can gamble. That would be a different strategy. I mean, you're pretty much looking at for example, here you have a V shape. There are different strategies, and this is just one of them.
Right.
What I discovered at some point is when you have like a downtrend, as you can see here on this chart, just to explain, these are the Ripster EMA clouds. Mm-hmm. So I use the 50, which is here, and 50 is the governing trend.
Okay.
You use the 34 here, and you can see when the 34 is below the 50, that means you have like bearish momentum here. So anywhere here, you can expect price to reject, because this is where people have their stops, people that are in the money. But within that EMA 50 trend, you get these EMA 9 trends. That's like the faster trend. What you want to see first is you want the 9 trend, you want to end, because when the EMA 9 trend ends, price will consolidate into the EMA 50. But the EMA 50 trend is still down, which means that this here is just basically a pause in trend, and you could expect trend to just continue. You understand?
Yes, unless it gets above the 50 for whatever reason, right? And are you somebody who it has to close above in order for it to?
No.
Okay.
No, what I'm looking for is I'm looking for price to just go above it. When you see here in this yellow zone that I have, here see price is moving above. And for me, this what happens here, from this moment here, we don't have any more trend. And if you look on the left side here, this is a good definition of a trend. Price is expanding, retraces, and the EMA 9 pushes it lower.
Yep.
Another consolidation. The EMA there is leading price lower, right? Until here it ends. Price goes above it. So here, this means that people are no longer adding to their position at this EMA 9, where they did here and there. So that trend has ended here. But there are other traders that use the 14, other are just waiting for the 21. It all depends on your own strategy.
This looks like a great way to have a stop, by the way. Like if you had a short going on, as long as it doesn't get back above the EMA 9, keep it, right? And then as soon as it does, cut it. And you didn't get the entire move because it went lower before it went back above the 9, but you got a big chunk of it. And that's all any of us want.
Yeah, absolutely. That is also what Chris taught me. He said, you don't have to just get the bottom. You need to just wait for it to reverse.
Yeah.
And then you can make 80% of the move up, instead of stopping 3, 4, 5 times, get all frustrated.
Yeah. A lot of people are like, oh, it's too late. I missed it. It's like, no, you probably didn't. If it's actually reversing, it's probably exactly the right time to get in.
And that's what price does, isn't it? Because when here goes up and then it goes up again, and here, like, oh my God, I missed it. And,
yeah.
FOMOing. But if you look really at trend, this EMA 50 here is ready to just push price lower. I mean, this is a really dangerous setup. You can get a breakout out of this. You should use a lower time frame. And what I'm showing here works on all time frames. For that matter, we'll get to that as well. But in any case, you can see I made the slides very clear. It's like here, this first push ends the EMA 9 downtrend. And you can see what it means that the trend has ended. It goes lower here, but from the moment that it has ended, price doesn't respect it anymore. And that is because people are no longer interacting with it. People are no longer selling and buying at that 9 EMA. So the EMA 14, it takes over, and it sort of leads to a little consolidation and a little bit of a push. So you can see here, you still have an EMA 14 downtrend, but this push here ends as well. The EMA 14 is now also ended.
Mm-hmm.
After that price interacts, you get this big gap up. Right now, you have a consolidation range already here. This is a breakout pattern. And immediately when price gaps up, everybody just exits because that trend is now ended. And actually, you can see how it's starting to curl upward. This little green here is a little trick, is the EMA 8 is crossing above the 9, which means that the fast trend really is ready for a push higher. But we cannot forget what I just said. We have the EMA 50 downtrend is still in effect. So you cannot just buy here because you're in this zone between people that are looking for what's going to happen next. They have just ended their trades. But these people here with this EMA 50, 34 in that cloud, that's the governing trend. And out of that can come a new EMA trend down into even a lower low. There's no confirmation that the low is in. You have no reversal yet.
Right. So I have a question. Now, when you're defining the box, it looks like you'd have the top of the box, the last place where it back tested the lower.
I'll show you when the box is drawn here for the example.
Oh, okay.
But in the next slides, right now, there's actually no, it's called flattening, and I'll explain that as well.
Okay.
But right now, there is nothing yet. So when you're charting yourself, this doesn't exist.
Okay, got you. I just want to make sure for people that want to, emulate this kind of, this is really valuable. It's super valuable. And I'm not sure how people can, I'm not sure how to express that in a way that makes it important enough sounding, but it's super important. Trend change is every single thing in trading. It's everything. So I'm just trying to get it to a point where people could do something like this themselves.
Yeah. Well,
yeah.
Let's look at what happens next.
Okay.
So we're here in this EMA 3450 consolidation, which basically represents a lot of people that are adding. A lot of people have the EMA 50 as their stop. It just trails their stop. So when the price breaks above the EMA 50, their position gets closed. There's something that happens. It's very significant when the EMA 50 trend ends. And as long as the EMA 50 is trending, you can get another EMA 9 trend out of that, further down. So as long as you're in this consolidation into that red cloud, you have to just be careful. And you need to let price prove to you that it wants to go sideways, up or high, So ultimately what happens, you have, here's this 9 EMA trend is ended here. And you see that price is consolidating here, and it causes the EMA 50 to sort of like flatten out. This is what you see in this downtrend here that goes for any moving average that you choose to work with. Simple moving, EMA, the DMA, there's so many that you can choose. When price interacts with it, you have this slope. As long as it's sloping, you have to expect rejection. But when it starts to flatten, it means that the rally is losing steam, and a flattening EMA is ready for a breakout. This means that you can get on a higher time frame. This would be, a big V shape. Right here, it's a consolidation. So ultimately, what happens is, price is consolidating here. Anybody can see here that you have levels to trade against. That's what you can work with. This here, from experience, lots of charts you can watch. If this one here goes, then bears will really pound on this thing. But here, breakout traders could enter the trade. It's and patience is key. You get these consolidations here. If you don't see it, you can just let it go, because it will always set up a consolidation above, or it will fail. You make a consolidation somewhere. But for now, this is what you have. But the EMA 50 trend is still not ended. So obviously, we still don't have this red box just yet. But you can see that, the EMA is flattening. That is what you want to see. For the PDF, I made a lot of details for everybody. They can check it later. There are levels to trade against. They always come from the left side of the chart. Here's like a big, it's a gap. call it a liquidity void or a fair value gap. There's so many different terms, but this is an area, you can trade against, and price is likely going to find rejection here, especially when the moving average is moving inside that. So just practice patience, because anything can happen still. And here you see ultimately what happened. It consolidated. There was not a lot of consolidation. This was like a long period, many candles, just a couple of candles. So this is basically a little bubble here. And then comes that EMA 50 push, and it really just pushes price lower. You even get an undercut. I detailed that as well for everybody. What is happening here. Some people are FOMOing in. This is really, if you don't know what you're doing, you buy this breakout. We spoke about that before. This is a trap.
Is the volume something you look at as well? Because I noticed that there is a little bit of a volume push. The first time it's above that lower box, the volume.
I look at volume. You can actually see it from these big candles. They usually go with big volume, and then the volume decreases again. I look mostly at the EMAs and the levels, but when you have like a consolidation, price here is it. You see that the volume here is decreasing. So that is something you can look at, definitely. What you want to see on breakouts really is volume when you're going to try and choose exposure. So, but it's really important for this system now here. I mean, this is now trending here. But if this one now gets bought and goes back up, everybody is going to get confused now, because, and in this example, I prepared it. Well, this is a little reversal model. I included that in the PDF for people. What you get here is an undercut. People are trying to catch knives always for some reason, and then you always get
innocent.
I've done it so many times, and it took me so many times. It's just, you have to stick to your rules, and this is particularly what I'm looking at. Adam Mancini also teaches this as his favorite setup. The PD array guys, like the inner circle trader, they call it a breaker block. They call this a stop run. And in a way it's true, because everybody that doesn't know what they're doing, they have their stop just a couple pennies below this low here.
Right.
And this volume here is these people stopping out. But this volume here does not indicate continuation. It just indicates ignorance to be expected. Mm-hmm. And you can recognize this. You can practice this. You can Google the breaker block. So what you want to see is this get bought. I'm still not interested here, but it could have meant to a failed breakdown. And then you see what happens here. It's like, then you get this volatile move higher, and it goes back to this where you still don't have any reversal. You still don't have any breakout. But what it does now, it ends the EMA 50 downtrend. So now we have officially no trend. And that is significant, because if you have no trend, price is just free to cross above and below. You don't have to look at the EMA 50 here now anymore, because nobody is buying or selling at that. You still have to expect volatility, because this is a move that you don't want to chase. This goes too fast. You can catch it here if you know what you're doing, but it's still a scalp as long as the trend is negative.
Got you. Now, so here's my question, because a lot of what I do is it's very similar to this, but it's using channels. So for me, the entry would be on a close back above whatever line that I'm looking at. I wouldn't necessarily do it on a spike above the line, because it can come back down. So the question is here for entry, how would you know to enter there and not like the first time that first red candle had a wick that went up into the box? How would you know not to enter on that first, not the first, the red candle that's right on the edge of the box?
Mm-hmm.
It had a wick that went into the box. So how would you, I think it's hard to tell actually. Maybe it ends. Okay, maybe it ends. So is it then the first time it re-enters the box space that's where your entry is? Or where how do you know where to enter?
You have this green. So I trade flags the same way. This is not a flag. This is just an impulse wave lower. You have 5 pivots. But just with flags you have the same structure, except you only have 3 moves. So you just have 2 knees, you could say. So this is the knee of the final move. And if you backtest this, you can look at any chart. You have this little bounce there. And every time when you get this undercut here, when this bounce gets bought, this always sees volume. But I'm really careful with these things. I mean, this is not like a swing long. This is just a scalp.
Right.
When you get in here, you want to go and you take partials as it goes. And most of the time I'm, out already pretty much here. If I have a lot of faith, it depends on what you're trading. I mean, if the index and everything is in an uptrend, but if it's an individual asset that you're just playing a breakout, you have to know what you're doing and what you're trading and what your odds are. It also depends much on sectors that are trending. If financial sector is trending hard today and you're playing a bank, you have a high probability of this move going back to the top of the range. But in any case, the top of the range here, this previous resistance, that would be your ultimate target. And it is a scalp. I don't get funky with these things. Right. And this is just what I want to see, especially when you want to look for swing stocks, when you're right now where we are at the end of maybe a pullback, are we in a bull market? Are we not? Nobody knows.
Right.
So you want price to show you that we're going to go back up, and how far, that depends on what happens, when it gets up there. Right now, we're in a downtrend and we need to get ready to, anticipate reversals. So for me, in terms of this system here, when you get this push, this ends the EMA 50 downtrend and it's now flat. And that's why this stage is called flattening. There's nothing to buy. It's only scalping, but the trend is now flat. Now, I said before, if this puts in a V-shaped recovery or continues, there are different strategies. And this is just one setup out of many that you can use. But when this happens, you understand that you can go into the next stage. You want this, I let this go. If this goes out, it actually looks like it wants to put in a V-shape. I sold it, wherever I sold it. You always wait for new consolidation to set up because these trends will catch up. The EMA 9 trend is coming out of this. Okay, great. When price pulls back to that EMA 9, you can decide if you want to buy there and try that. Again, all these things you can backtest, you can look historically into charts. But for this system here, what you want here now is that this move will fail. And there's a high probability because look how it is exploding. It makes no sense. So you don't chase a move like that. You just wait for it to happen. And look what happens. And you see this so many times.
Can I just say, I can almost see on the chart when CNBC will start talking about it. The second that you hear about it's gone up this many days and it's so great. That's like the second.
This
that's
is
like
crazy,
right there.
Yes.
Yes. And as a new trader, when you're listening to CNBC or one of the financial, I don't want to pick on them, right? But if you're listening to something like that, the second you hear it, you go, oh, let me catch this trend. And then it reverses on you almost immediately.
And it does, because you always buy it there. I mean, how many people have not bought this before I started studying,
Of course, because you're like, look at this fantastic reversal. Look at the strength that it showed. And then, oh boy. And a lot of it has to do with patience, right, too. If you are listening to something like that and somebody starts talking about it, just make a note. Just put it on a watch list and then see what happens. It might work for a day or two, but almost always that is the top or bottom when people start talking about it.
But you're missing out. and psychologically, that is so hard.
Yes.
And it took me so long to learn that instead of focusing on what I missed out, what I missed out on is never to be recovered. That's all here. What I missed out is not there.
It's already done.
I should be focused on what I can lose if I, buy here. I'd be like Newton, and ruin yourself.
Yeah.
So anyways, price should set up a consolidation here, and then the EMAs catch up. In that time, these bands would turn. The EMA 34 would cross above the 50, which would be bullish. Right now, is still bearish. And obviously, there's no trend. This is what I said before. Price is no longer interacting with the EMA 50. There's no trend whatsoever. There's a small EMA 9 trend here, but it's only corrective. And since there is no trend, you can see that price is just free to just slice and dice. And this is like the most volatile part of this setup. So what is important is right now is that this low, that this will hold. This is, in my book, this is a double bottom. is the first bottom here, and the second bottom undercuts the first. And it's a very strong setup. This is what you want to see. But now you want to see consolidation sideways so that this non-trend thing can resolve. It can still break down later on.
You know what I looked at when I was looking at that? I see like a megaphone personally. I see a lower low, but I see a higher high. And for whatever reason, the algos have been megaphoning crazy lately. I see megaphones everywhere because you know what? It's the hardest. It's actually the hardest thing to trade is a megaphone because you got lower lows, but you got higher highs.
Yeah, it's extremely volatile.
It is super hard to trade.
And they're essentially continuation patterns too. So you don't want to look into for a reversal out of a megaphone.
Right. Tough. Anyway.
But, about trend then again, we're coming to a little bit of a cool nugget here. Now we've been interacting with, this is the daily chart on this particular asset. So the daily EMA 50 trend ended, and it looks like, you know, very significant action. It's pretty confusing, you know, with all these. But on the higher time frame would be the weekly. You can see that the all price has been doing here really is consolidating into the EMA 9 on the weekly time frame. So while we already ended the daily, you know, on the left side here in that red box, that happened here, you know, on the weekly time frame, there was still very strong downtrend, and price only consolidating sideways into the EMA. As you can see that here with that initial move here that we've been consolidating, you know, that was people adding there into the weekly EMA 9 trend.
Yeah. So
that could easily just have continued lower. So it didn't. Then you get on the daily chart, you get this volatile move. And that just definitively ended the weekly EMA 9 downtrend. So that is significant. The higher time frame downtrend has ended now. That happened here in this push. Here's an example of what can happen. You know, this is still in the cards. It's possible. Nobody says that it's happening. But I always say this to people. You know, I get a lot of questions on Twitter. What is it going to do? And there are always guys that say it's going to go to the moon and it's going to go here, it's going to go there. But please, you know, the trend is still down. So we need not be in a hurry. We need to wait. Right. This is possible. But when I already have this and on this daily time frame after a long downtrend, you know, let it consolidate a little bit further. So what I do here is my trick. I take this consolidation here. You can see this. And again, you can backtest this on your own chart. You can find sideways ranges and you can see if you can identify, you know, this type of bear flag that you would have here. And you get this volatility here. I clone the initial section here into this before that spike starts. And then I duplicate that so that I get an idea of time in which things have to start panning out. And what you see in these ranges is in the middle, always you have this inverted three-wave move. You know, I don't want to call it an ABC because ABCs, they're all cut. You know, it doesn't matter what it does. This can make an undercut. This can make a higher high. It can start doing triangular. It can be a megaphone, but it always has these characteristics of a three-wave move. Now, if this here doesn't find the consolidation and continuation, then we are entering finally into a breakout stage. All this has to happen for the trend to start converging. There's no trend here. And this is what's called convergence, contraction. And it's funny to see as well, if you have a perceptive mind, you know, these volatile downtrends, they call them expansion, but you also see that the EMA 34 and the 50 very much expanded. They're very much away from each other. It's the same here. Here you have a contraction. So the moving averages come closer together, and then you get a move of expansion again, and the moving averages become expanded. So then I have my friend Stuart Ratt, and he always said to me, I used to be really impatient, and he said to me, you know, before this can reverse, this has to turn first. And that is what sort of got me in the state of thinking about, you know, how do these turns work? And that's when I started to see these dynamics here. So you have this pattern here, you have this pattern here. And then ultimately, if no new stage comes here, there's again, you know, this rejection. Again, you don't want to buy these volatile moves of one side of the range to the other. I haven't even considered if this would actually be a breakout level, because to me it's not. I don't use this top line as a breakout level, not at all. It's just in terms of time and in terms of process, it's like a steel rail for me to cling on to. And you see, really, they're converging, they're dancing around each other, and they're really contracted here. And that is beautiful to see. And this tells me that from here, a trend can emerge in either direction. But we still have nothing to trade against, so we just need to wait. But you can see clone, clone, clone. They all have the same time. So in this green zone here, this is where you want something to start happening. I'm not sure if there it is. That's the slide. Because what is happening on the higher time frame, we are still consolidating, and the EMA 21 on the higher time frame is still trying to push price lower. And here you can start measuring and see your odds. Here's a control bar. Here's a control bar. Those would be your targets to trade against when you want to take partials, negate risk.
Yes.
Because if you would buy this, you're still buying in a downtrend. The most secure way is to wait for a consolidation after it gets above the EMA 50 on a weekly time frame or on a daily, whatever time frame you want to trade. But it is important to know that the trend on the higher time frame is still down. This could be a consolidation into the weekly EMA 50 and then continue lower. Really easy.
Yeah.
I measured the distances here. You see now we have like 8-9% just to get on to equal highs here. That's good risk reward.
I just want to make the point here that you made. I just want to emphasize it, and that is when you are trading, the higher the time frame that you're looking at as your overall viewpoint, the less likely you are to screw up direction within the trade. So if the weekly is still bearish and the daily is still bearish, and you are taking an intraday bull trade for whatever reason, it might be good to keep your size down just until the other two time frames catch. Because trend does change on the smaller time frames first, but if you're trading, you have better odds if you're trading in the same direction as the larger time frame. Just in general, it's less risky when you start from a bigger time frame and move down to a smaller time frame and try to stay within those same trade points.
Like a sailboat zigzagging against the wind. Yeah.
Right. Okay.
Absolutely. Yeah, and this is true, and that's why it's important to see what your odds are. When you go in here, you don't buy this. We'll get to an entry model after this, but you need to know what your potential upside is, because you know what you're going to. If this will be too little, it's not worth looking at. You can just wait.
Right.
So we are basing here. We have no trend on the daily time frame, but the trend on the higher time frame is always there's always a trend on the higher time frame. Exactly. Let's see where we get. This was so this trend. When you get to this stage, actually, the basic principle is now finished, and this was the presentation. The last thing I want to say about this in this stage, before we go to some examples, is that this stage, I call it break or fail. As said, we are still eligible to a move lower. The weekly downtrend can continue.
Sure.
Starting to flatten, we can get a move here and another console. So sideways is also a possibility. So, but within this time span, you want to see this move out. And if this is not breaking out or down in this time span, then this reversal is likely not happening on this time frame. And then I keep these levels and I still look at this green zone and just copy it through. But I start looking at the higher time frame, because what you get is that these three boxes together, you can draw a red box around them. So here you see the daily boxes, all of them. So if this trend would fail, you get that push into the EMA 50. And if that would do the same thing that it just did on the daily time frame, with your three-wave push here and then your consolidation, that can happen on the weekly time frame as well. And it works exactly the same. So you get these boxes on all time frames, and until a 50 MA of a higher time frame catches up with this setup, price will get a push, has to interact with it, and then price will either end that 50 EMA trend and trend either higher or lower, or it will continue sideways and wait for a 50 EMA on, again, a higher time frame. And it keeps spreading like that, going sideways until the governing EMA 50 presents itself. And that's interesting, because when you do this on an hourly time frame and the hourly EMA 50 fails, you can go to 4 hour. If the 4 hour also fails, you go to the daily. From there you go to the weekly. Usually, that's pretty big consolidations that you're talking about. But when then finally, let's say, for example, the 4 hour EMA pushes price lower and establishes a 9 EMA trend, then in my system, the 4 hourly time frame becomes the governing trend. Does that make sense?
Yes, I got it.
So from that moment, the 50 EMA on the 4 hourly time frame, that was the one that caused the breakout. So that's the one that is pushing the swings. So I made for the readers of the PDF file later on.
Oh, that's beautiful.
There are lots of comments here explaining, and people can also interact on my profile on Twitter. I'm there like all the time, always ready to answer questions. And I love people asking questions, because questions from people, they force me to sort of repeat the knowledge that I have, and sometimes also confront me with the fact that I've learned more or that something's not valid anymore.
And that's useful. That's helpful, right? That's really what I use social media for a lot, is getting either validation from people like yourself who also do technical analysis, or to get pushback and then say, hey, why did you do this? You should have, don't you want to wait for XYZ? And even if I disagree with them, the thought process that I go through there is super useful, because I want to be challenged. That's how we learn, especially if I'm wrong, because I feel like that's like a learning opportunity.
Yeah, and that's the first thing people have to understand. I had a big deal with that. I have a big ego, and I've learned how to suppress that and keep that quiet.
The market will teach you quickly.
The market slapped me around so hard, and I'm completely humble now. And I feel that if you really want to learn something, if you want to try and master something, you have to be completely humble, and you cannot get feedback from other people without putting yourself in a vulnerable position.
Right.
The first thing you have to learn is this: markets is not about being right or wrong, And so let's have a look here. This is what I wanted to say is you can repeat this on all time frames. You just had to look at the daily and how that would become a weekly. Here's an example of a 4 hour time frame where the exact same, because you have the initial push. The EMA 50 trend doesn't end here, but the EMA 9 trend is ended. And just like I said before, this is a different asset, different chart here. The EMA 9 is leading. People are adding to their shorts until suddenly that trend ends. And then even though it slopes, here, there's no EMA 9 trend, and the trend is not respected. The EMA 9 is not respected. Price is just slicing through it. And that's what that convergence is. So here again, you have that 3-wave move that leads price into that convergence, and it goes into this breakout stage. And here you have an example of an entry model. You have a consolidation here. There's a flag here, this diagonal. I love diagonals, I have to say. And there's also that example of that breaker that I showed you. You have a bullish candle here. Then you get your undercut here. That's like your stop run. And then again, it goes above. And here people just enter the trade. You see it with volume as well.
Yeah. So what we're looking for, if somebody was to look at their, whatever chart that if they're interested in a particular ticker, what they're looking for, at least when you're looking for a trend change reversal upwards, they're looking for when it starts to, instead of just backing off of the 9 every single time, when it starts to go up to the 50, you're talking about EMAs, by the way, but I'm talking about EMAs. So when it starts getting above the 9 EMA, back to the 50, come down again, and then they're looking for that pattern as a flattening pattern. Some people would think that this was accumulation.
Yeah, it is.
Some people would call it that. Right. And it is similar to what you said. I remember once I was on a boat, a cruise ship, and they thought somebody had jumped overboard, and we were going pretty fast. But when we started to turn, we really tilted. But the thing is, before you can turn a boat, you have to slow it down in general. There's not a lot of V-shaped, you're going to miss it. It's V-shaped, but then down a little bit. It's more usually, if it's a longer term reversal, it will be less V-shape and more of a box-like strategy, like what you've pointed out. Just want to say that. Not always, but usually.
That is agreed. And these breaker blocks, people should Google this. It's called PD array trading. You find your breaker blocks. Those will teach you a lot about, they're not, this is something the inner circle trader invented and gave it a name. It is just a decades old reversal pattern. And you can use this for your V shapes, but you have to, know when to buy and where it was in terms of a base box. And if you want to be a swing trader, you don't need to catch this lag. You can wait for the confirmation.
Right.
So what you want to see out of this is expansion, big move here, beautiful. Then price will come back for that, and that's what Ripster teaches. Just wait for the pullback and see if that holds. Now, what happens I've called this a fair value gap. And as you can see on the left side here, you have this wick. You have this big momentum candle, and it just continues here. So between the opening of this candle and the high of this, so it's actually between the low of this candle and the high of this candle, there's a gap here. When there's no trend, you see that all these wicks and everything just overlaps. But in expansion and volatile moves, you see these gaps exist. And if price respects that, at the same time that you see that the EMA 50 and 34 have now switched bullish, you call this a bullish cross, you can take a chance here. You can buy here. So this will be a sniper entry. This will be confirmation entry. You can even buy when it breaks out. You just buy your diagonals. I mean, there's so many breakout patterns, but at this point, when you get a breakout pattern here, the trend has changed, and nobody can argue because everything is red, everything is inverted. Everything here is now positive. This is what constitutes a reversal. Here, a reversal is successful. So here we are anticipating it. Continuation is still possible. So if this would fail to the downside, this would be a short.
Oh, yeah. Yeah, a big one. Because actually, the longer it consolidates, do you find that the bigger the move afterwards? That's what I find a lot of times. If there's just consolidation, like in XBI, for example, I don't know. That's like the worst chart because it's just consolidating. But
yeah.
But eventually it's going to move somewhere.
Yeah. Or RTY, IWM.
Yeah.
I mean, there's lots of trends to catch on the lower time frames. But has it been consolidating sideways for a year now?
Yeah.
Something like that. So here's an example on the 1 minute time frame. It's the same on all time frames. It's 1 minute, and there's no difference. Ultimately, you get your entry model, the timing, the inverted three-wave move. I picked this up from EW.
Yeah.
You get a V shape. So Elliott wave, people always talk about impulse waves. The first thing you learn when you start practicing is that the price does not move the way they show you in the book.
Mm-hmm.
And what I learned is when you get an impulse down, an impulse is complete. You can get an impulse wave up immediately. Yes, that would be your V shape. But if price goes sideways, you get two sideways corrections that are not part of any trend. And that's what most people fail to see. They think price goes up and down, but sideways is also a direction. And that's what you have here, basically. You have an ABC and an ABC, and then you can go higher. After that, the trend is neutral, and any pattern in terms of fractals is open.
This is fantastic. Oh, I really appreciate that. So we're short on time here. This has been, for me, very eye-opening. I appreciate you going over this. It was helpful for me to see it visually in addition to the PDF. But thank you so much, Barky, for your time. I learned so much, and I appreciate all that you contribute to Twitter X now, if you will. I appreciate all that you contribute. You're a fantastic follow. Everybody, he is at Barkworth17 on Twitter. Please give him a follow. I followed him for a long time. I'm Cordova Trades. Please also follow at Place Your Trades. And if, like I said, if you go to the website, you can download this right away. And then Barky will put it up soon, though, on his Substack as well. So thank you, everybody. I hope you have a great trading week. And thank you so much, Barky. I appreciate it.
Thank you, Julia. I really appreciate it.
Goodbye.
Bye.